Hey guys, haven't made a video in a while. Haven't really had an opportunity to, but the house is clear for a few minutes, so thought I'd put together something on just a little different way of looking at things. I mean, we know we've kind of established a common language to think about the market and ranges and whatnot, but somebody kind of offered this to me, and it really is a more natural approach, I think, in a very naturalistic way of looking at things. And I hope it gives you some insight into looking at things from a big picture and then zeroing in on a smaller picture. Knowing where you are in the larger story of things, and then once you understand the larger story, then you know what kind of trade to take. All right, so let's start with let's look at the S&P on a very large scale, the quarterly level. And you can see on this quarterly chart that basically the market has progressively been going up over several quarters. This last quarter was October through 2021, and we had a high up here at 4822 and a low of 4252, and we also had in the subsequent quarter had a lot of volatility here because of Putin. We had a 10% sell-off correction. So we did put in a low here at 4085, but the market pulled back into this range, into the October quarterly range, right? And that alone kind of gives you a big idea that, even though there was volatility and things seemed like it was crashing for a second there, it really wasn't. It was just kind of hanging around within a quarterly range. Okay, so let's go to the weekly. Let's go to the weekly chart. Okay, so weekly chart, what is that telling us? See, and this is where understanding the bigger picture kind of correlates in. So now we've since October, the quarterly high was up here at 4808. And then over several weeks, the market pressed downward back into the quarterly lows, and really even made another low a little bit lower than that. Okay, put in another low. Now since then, what have we been doing? We've been moving back towards mid-range within that quarterly picture, within that quarterly range of 4810 and the quarterly low of 4096 or 4247. Okay, you kind of put both of them in there. Sometimes I put two things in there if they're around the same area. The other thing I want you to appreciate is the time these movements take. It's not like I think in our typical approach, when we think of day trading, or you think of a really high frequency trade, things are happening fast on a microscopic level, but not so fast on a higher time frame like this. And knowing where you are in the bigger context helps you not only decide what kind of trade side you want to get on, but it can help you kind of chill out a little bit in that the market is not making dramatic changes within seconds. Okay. All right, so let me go forward, and I think I'll come back to that in a second. So this is our quarterly picture. Here's the quarterly high, quarterly low. Quarterly high was put in at around the October quarter high. So we put in a high in December 2022, pulled back big time, sold off big time to this low of 40.91. Let's measure that. That's a 719 point move, or a 15% change from the high. Okay, from the high. And what has the market done since then? Well, it's been pulling into the quarterly midpoint, mid-range. From the lows that we put in February and March, we've moved mid-range about 10% over the last few weeks. These are the last few weeks. So over 1, 2, 3 weeks, we basically moved from this low to this high, 508 points, or 12.3%. That's a good move within a relatively short amount of time. Very good move. This week, we closed higher, and that was a 129 point move. Okay. I'm gonna bring you down to, this stochastic is a great indicator, because it kind of it models it emulates and tracks the market, on the upper chart. But you don't want to depend on it. You want to be able to say, okay, well, here's where the market was overbought. Stochastic was overbought here up at the highs, and then it oversold. Now we're oversold here in May, and we're coming off of these quarterly lows, right? The stochastic is still going into overbought territory, and the market is moving higher. All right. So you're not depending on it, and you're using that to correlate it to the price chart. So let's look at this on a daily basis. Daily chart. Okay. Again, you can see the relationships in real time, right? Quarterly high 4813, and you had a couple of lows down here, quarterly lows at 4098 and 4241. So what are we doing? We're coming off of the lows, coming off these quarterly lows, making higher highs. We pulled in a little over half of that range. Little over half of this range. How far in is that? Well, we can go over here, get the Fibonacci tool. Okay, measure from the bottom to the top of the range. So we pull back over 100% of the range, and now we pulled over the 50-yard line. To the 318 level, and that's where we are now. Okay, now let's look at stochastic now. Stochastic can be a really great tool. I mean, I just think we don't use it the right way. But here you see we're at these oversold levels, coming off of the high, coming from the quarterly low. Stochastic was oversold, right? Now, what I want to zero in on is what happens at these transition points in the market. Okay, so here's the low. Stochastic's oversold right here, and you're at these quarterly lows. And observe what's happening here. Okay, so you have a level here, you have a range here, have another range here, and right here this range closes above this range. This range here closes above this range's high. See, this is a high here, but this guy closed above it. And this range here really was one of those transition moments. Okay. This range here remained intact, closed above it. Bulls started kicking in and then went on and made higher highs from there. All right, now let's look at some of these other days. So this was really the first breakout day coming off of these quarterly lows. Then this range stayed intact. Yeah, it was tested down here, stayed intact, and then this is the new range. Okay, now observe this breakout here. Okay, correlate that with your stochastic. And notice that in the second higher high day, or this second range, where are you coming from? You're coming off the lows. Stochastic is a little more, the fast is above the slow, right? Third breakout, this range remains intact. Put in another new range, pull back, another new range. There's a pullback day, another new range, pullback day, and this range remained intact. Cycle of new highs, cycle of highs. We've been in a cycle of new highs coming off the low, quarterly low, all right? Another new range, and then on 329, here we are. And did we put in another new high? No. This day, 331, closed below this guy. That hasn't happened. You haven't had a close below ever since you came from the quarterly low. Look at what stochastic is doing. Okay, it's turning over. Now the fast is below the slow period. And we could, stochastic emulates that cyclical motion of the, of the market. And, and the market is moving in cycles. You can clearly see that. Low to high, low to high, low to high, low to high. So we're coming off of a cycle from here, quarterly low. We're coming off a cycle of higher highs. This is what we've been doing the last couple weeks. A cycle of higher highs coming off the lows. And just the other day, we broke the low of 329. And what, at this point, what we should be anticipating, sorry about that. What we should be anticipating is a move back. This cycle of lower lows most likely going to continue for a while. We're going to get a few days of this. Could easily get back to the for to down back to the lows, the quarterly low. And you know, when you start thinking about day trading, okay, how am I approaching this as a day trader? You're approaching it with a sense of anticipation that this cycle of highs, or this cycle of higher highs, is over. We've had a transition day here, and now the market is going to do a cycle of lower lows to some point. You know, we don't know how far that could be, but I think we're going to see a sell-off for a few days. These things happen in cycles. I can pull up this cycle indicator and show you, you know, like cycle of higher highs, couple of days of lower lows, cycle of higher highs, a few days of lower lows, cycle of highs, cycle of lows. And you can use Stochastic to kind of correlate with that. So you know when you're getting to these extreme points, like here, overbought. See, we were up at the quarterly highs. And right here, see, this range was broken, and that kicked off a series of days of lower low. Back to the lows. Okay, back to the low. So this has a lot of application. As a day trader, you know, you're going short now. So you would be waiting for a pullback, you know, into this range, into the previous day's range, to take the market lower. And the opposite, if you were coming from the lows, pull back off the high to get the new high, pull back off the high to get the new high, pull back off the high to get the new high, until the pattern breaks. Now you're going another direction. If you were a credit spread trader or a option trader, you would be looking at selling a credit spread up here. A call credit spread right here. You wouldn't put an iron condor on right now and your market is, you know, you have two wings. No, put the call side on now. Let that market sell off. And then when you see evidence of this lower low cycle being changing, then you put on the put side, as far away from the low as possible. You wind up with these huge wing condors. It's a really interesting way of looking at it, and let me give you another example. Let's look at wheat. Okay. With wheat, you can see we had a cycle. Look at this huge cycle of coming off this low here, breaking out, cycle of higher highs, kicked off this huge trend right here. At some point, we don't have a we have a low up here, say somewhere. And this candle would have been the beginning of the cycle of lower lows, right? You can see lower low, pull back, lower low, pull back, lower low, slight pullback here, put in a lower low, pull back here, slight lower low, pull back here, and now lower low. So we're in a cycle of lower lows until otherwise. And that's kind of what is interesting to me. You can look at it from a VIX, from an emotional standpoint. The VIX is an emotional indicator. And we are coming from a high VIX level back when, the Putin thing was kicking off. The VIX shot up, and now every day it's been trending down back towards the lows. And we expect volatility to continue lower until otherwise. See, you had you haven't closed above 21 yet. But we're kind of anticipating that because, the market is moving down. You had to close down. So I really think this is the end of this cycle, and we're about to get into another cycle, into a bearish cycle. That helps me out a lot. So I hope that helps. You can correlate this with a lot of things, with your strategies, with your day trades, with your, in terms of if your option, whether you want to be Vega positive or negative. But I like the idea of cycles because it's natural and it's more realistic than approaching the market with a predictive standpoint. Like, I think this is what's going to happen. Looking at it like this is more like what is happening within the moment. Hope that helps. Give me a comment and take care, everybody.